Last week, the Court of Federal Claims certified a class action brought by insurers to recover the cost-sharing payments that President Trump unceremoniously terminated. You may remember that the cost-sharing payments are monies covered by insurance companies and then reimbursed by the government that reduce the out-of-pocket payments poorer people buying exchange plans need to make. At first blush, the court's opinion looks unremarkable. Because insurers share a common legal claim, you promised to pay me and you broke the promise, it makes sense to certify a single class instead of dealing with a bunch of duplicative lawsuits. But the rationale the court employed to reach the result is potentially explosive. Should it stand up on appeal, it suggests that the federal government will be liable for tens of billions of dollars in damages, with the precise amount growing every day. It's worth explaining why. With the help of Nicholas Bagley, who's forgotten more about the law than I will ever know, we're gonna do just that. This is Healthcare Triage News. If insurers win these lawsuits, and Nick thinks they should, how much money will they get? Can they recover all of the cost-sharing payments that the ACA promised to them? Or have insurers mitigated their losses by hiking the premiums for their silver plans and shifting unsubsidized enrollees to gold or bronze plans, a practice known as silver loading? Mitigation is a principle you might be familiar with if you've ever thought about breaking a lease on an apartment. Although your landlord can sue you for any rent owed for the months remaining on the lease, he or she also has a duty to find a new tenant. If they do, you only have to compensate your landlord for the time that the apartment was empty. The landlord has mitigated his or her losses. Silver loading is where insurers packed all the premium increases into silver level plans. You need to remember that the subsidies people get are pegged to the cost of silver plans. When insurers do this, everyone gets increased subsidies, which can make gold plans cheaper and bronze plans pretty much premium free. The same principle of mitigation should kick in here. Silver loading has allowed insurers to sidestep most of the harm associated with the loss of the cost-sharing subsidies. Insurers haven't hemorrhaged customers, instead they've adapted. Indeed, some insurers are better off now than they were before. As premium subsidies increase, they get more customers signing up for their gold and bronze plans. According to Nick, and never ever bet against Nick, it's the government's responsibility to prove that insurers had in fact mitigated their damages. Here's the thing though, it's hard to know what the world would have looked like if the cost-sharing payments had been made. So it's hard to know whether any given insurer is better off or worse off now that they've been terminated. In fighting over class certification, the government latched onto this point, the complexity of the factual inquiry over damages, to argue that class certification was inappropriate. Each individual insurer's damages will be different, the government argued, so it'll be madness to try to resolve their claims in a single suit. The judge didn't buy that. He said, basically, that mitigation is irrelevant to the ultimate damages calculation. Insurers are instead entitled to every dollar that they're owed under the ACA's statutory formula. The court's refusal to consider mitigation will make no difference for the $2 billion or so that are due to insurers for the cost-sharing payments they lost in 2017, but it could matter enormously for the many billions in cost-sharing payments that insurers are entitled to in 2018. The same goes for 2019, 2020, 2021, you get the point. Every day that the ACA's cost-sharing provisions stay on the books is another day of additional liability. We could be talking something like $100 billion over a decade. Congress could stop the bleeding by wiping out the statutory obligation to make cost-sharing payments. Indeed, the judge's decision will put pressure on Congress to do just that. But Democrats and Republicans are at loggerheads over what to do with the cost-sharing payments, and Nick doesn't see matters improving until after the midterms. The bleeding will likely continue. So what happens next? Likely appeals, and who knows? Nick thinks that on the question of damages, this case is by no means over. He still thinks that insurers shouldn't be too bullish about recovering cost-sharing money for 2018 and beyond, but they're one big step closer to that goal. It's a massive amount of money. Congress or the president could fix this in a snap, but don't hold your breath. Hey, did you enjoy this video? It really does help if you like or subscribe to the show right down there. And while we've got you, anything you can do to help support the show in other ways is appreciated as well. And one way to do that is patreon.com, a subscription service which allows you, the user, to support the show for as little as $1 a month. And if you don't want to, that's fine. It will always be free. But if you can, it helps make the show bigger and better. We'd really like to thank our research associates, Joe Sevitz, Carlos Hiergos, and Crafty Geek, and as always, especially our Surgeon Admiral Sam. Go to patreon.com/healthcaretriage. Links also down below. And while we've got you, get any merch you like at httmerch.com, and my book, The Bad Food Bible, still out there, still available in stores. Really appreciate it if you pick up a copy.